Okay, so in this video I am going to cover the Fib retracement tool. The Fib retracement tool can be used for Fibonacci retracements, which will allow you to see typical re-entry levels on an asset that is in decline, as well as I'm going to show you how to use the Fib extension tool, the Fib extension inside of the retracement tool to determine advantageous take profit levels that are very common in this market. So the first thing we need to do is we just need to pull a quick Fib just to mess with the settings a little bit. So what we're going to do is just pull a Fibonacci, then you're going to go into the toolbar and hit the settings tab. First thing that I like to do is I like to extend the lines right, and I also like to put the price levels, or the labels rather, on the right as well. And then that just makes the read a little bit easier. I often, we're looking over here at the price anyways, so it's nice to just see the prices associated with the different Fibonacci levels over here as well. Going back into the settings, we're going to add a couple different levels here. So right after the 1, we're going to add the 1.272. This is a very common level in Forex markets. There are a lot of Forex traders are in the crypto space. So there's plenty of traders that are using traditional Forex setups for their Fibonacci retracements. And this 1.272 is a very traditional take profit level in the Forex market, and you'll see it shows up a lot in the crypto market as well. So we've got the 1.272 here, then we're going to add the 1.618. 1.618. Then we're going to add the 2. It's a psychological level. It's not a Fibonacci level, but it's a psychological level. When a price doubles in a ratio, people, we as humans think in those sorts of terms. Then we're going to do the 2.382. Again, that comes from the Forex space. And then we're going to add the 2.618. 2.618. We want to know when the price triples, so we add the 3. We add the 3.382. And the 3.618. The last one, the 4.236. Now, if you do an extension and something makes it to the 4.236, just you're done. Take profit and be very, very happy. You'll often that's typically where a parabolic move is going to conclude. If you see something going parabolic, you got to be really aggressive with your take profits anyways, but I would more or less exit most of I would exit most of the trade at the 4.236. Okay, so those are the settings for the Fibonacci extension. Just gonna lower the background down a little bit. I don't like it super bright. And I think that's it. Yeah, that's it. Okay, so now we've got our Fibonacci tool. So now let's go into some of these moves and see how it responds with the price action. So we've got, with Fibonacci, you want to identify highs and lows. So get on the daily chart, or any time frame works, but you want to make sure that it's a confirmed high. So what you'll have is you'll have a peak, and then you need, you know, 1 or 2 green candles going up to the peak and at least 2 red candles coming down from the peak. That's going to confirm that it is actually a confirmed high. As you can see here, we had a low and then a high, but this is not the swing. This is just the movement inside of the swing. This is the low and this is the high. And in between those are some other movements, but it's not a confirmed low until you've got a complete change of direction here. So let's pull a Fibonacci extension going from this high down to this low. You can pull it from the candle body closes, or you can pull it from the wicks. If the wick looks really unreasonable, like if this wick here was way down here, kind of like a flash crash situation, then I would tend to ignore the wicks. But if the wick is kind of in the same general range as the body, most traders will go with the wicks, with the Fibonacci. So let's just pull a fib from that and see what we see. Yeah, so you can see here that the price nearly doubled. So if I was trading this, I would have taken profits at the 1.272 and I would have taken profits at the 1.618. Usually when I'm working with Fibonacci, I'm going to aim for those 2 targets. So I'll have one at the 1.272 and one at the 1.618. Anything beyond that is just kind of guessing. If you watch an asset kind of just really take off and there's a point that you're happy with, just use a fib to make your decision, because a lot of people are going to be looking at that number as well. So you can, you know, get ahead of them or something like that to help make your take profit levels. Switching over to the line chart here. If we go with the line chart, yeah, so it didn't quite make it to a double. So if you were to take profits at the 1.618, that would have been a very good place to take profit. Now let's do another one from the next move. So let's say we took a move here down to here. Actually, let's put the candles back on because we've got some wicks here. So from here down to this one here. So again, you can see the resistance that the 1.618 caused. A lot of people made this measurement from this wick to this wick. And when we got, even on top of the 1.272, you can see how it responds. So on the 1.272, it went up, and then it retested that level, and it came up and it met the 1.618 as resistance. These show up all the time. They show up all the time. Does it mean that it's going to stop? Well, obviously not. But, you know, it shows up all the time. Now, where did it finally end up stopping? Look at this, at the 3.618. So the ratio tripled before it tripled on the 618 before it tapped out. You can see, like, the bots trade on this. A lot of traders trade on this. So these levels are very significant. They're going to help you, you know, ascertain what a good take profit level looks like. So that's kind of the use of the Fibonacci extensions. So now let's do a retracement. So I'm just going to go back to the line chart, grab my fib tool. With the retracement, you're going to go from the macro swing low up to the swing high. Okay. It's looking like the candles are working better here, so I'm just going to go up to that wick there, down to this wick here. So we came down to the 0.5. The 0.5 is a very typical level. It hasn't confirmed yet. You know, this is not a low yet. We do have this little low, but it's not confirmed. It's not going to confirm unless we can hold this 0.5 as support and continue to the upside. If we continue to the upside from this 0.5, then I would consider that a support level. But, you know, at this point, I wouldn't go in and say, yes, that's where I'm going to buy back in because it's come off. It hasn't touched the 618. You can see all of the confluence back here on the 618. I think it's going to come down to the 618. So Another thing too, if you're just really or the asset's moving quickly, so things move a lot slower on the daily. Let's say you're on the hourly or you're on the half-hour chart or something like that, and the asset's moving really quickly. What you can do is very common levels. You got the 382, the 0.5, and the 618. You can place buy orders at all three of those, scaling into the position. Then once you've accumulated the position and it's on its way to the upside, you would then look at your extension to see what would be a good take profit level. So for this one, I'm going to kind of ignore this. You know what? Let's do it. If people do it, people do it. So, your strategy will vary, but I wouldn't be surprised that other people are looking at this. So I may as well look at it as well. Now we're on the extension. So we came in at around the 382, we came in around here, and we came in around here. So now we need to exit the trade. Basically, what would be really aggressive trading style is, you want to get some of your position out at the 1, because this would negate you not taking profits at a double top. So you want to take a little bit of profits at the double top. If it continues up more, you do the 1.272, and then if it continues up more, you get the 1.618. And that would be, if you were to eliminate your trade entirely, you scaled in on 3 levels on the way in, and you scaled out on 3 levels on the way out, and you made some pretty good money. So let's just quickly do a Wyckoff here. So what we've been seeing a lot in the group is with these Wyckoff boxes. All right, so let's do one on Fetch. So basically what we would be looking for on Fetch AI is if we were to take the Fib tool, if we wanted to go aggressive, we would go with the wicks. If we wanted a more conservative approach, we would go with the candle body closes. Let's go with the closes. So I'm gonna pull a Fib from the top to the bottom. That's from the buyer's climax to the automatic reaction. And then we would take profits at the 1.272 at 1400 Satoshis and the 1.618 at 1500 Satoshis. Now, if we wanted to be a little bit more aggressive and go with the wicks, you can see it's a much different take profit strategy. Now we're taking profits at 1700 Satoshis and 1900 Satoshis. So, you're going to have to play around with it. You're going to have to read the strength in the chart. If it looks weak, be conservative. If it looks strong, go hard. It's a really good tool just to kind of, pick a number, basically. So it's like, okay, where can I look to take profits? You're going to look at support and resistance flips. You're going to look at the volume on the VPVR. And you're going to look for confluence on those Fibonacci levels. You put all of those together, and that will give you a good case for profitable take profit levels. I hope that helps. If you have any questions, just bring them to the group.